Bitcoin has failed to close a monthly candle above $30,000. What does this mean for Bitcoin? Let's go ahead and jump into the charts. Okay, MegaWhale team, welcome back to the channel, guys. I hope you're all having a fantastic day and, of course, a very relaxing weekend. We're here to discuss Bitcoin on the higher time frames and, of course, the short term. Bitcoin has recently closed a monthly candle just below that $30,000 level and is currently still struggling to break through the $28,000 to $30,000 yearly resistance, which will result in the next leg up. Until then, that resistance remains as a resistance and rejection on a higher time frame is possible. In today's video, we'll be discussing how that change on the monthly candle close could potentially impact a short-term and a higher time frame price action and what we can expect next. Before we get into it, smash the like button, hit the comment button, and of course subscribe to the channel. We do daily videos on Bitcoin, focusing on the charts, the data, the technicals, the facts, and no hype, no bullshit, no shilling, no emotion. Pure raw fact. You can also find us on Telegram, the second link down below in the pinned comments. You get access to charts, videos, information, educational posts, news events, updates, and so much more. I highly recommend joining up with this channel if you like my content and you like the way we analyze. You can get so much more of it in this channel over here. If you're interested in supporting the channel, sign up to Bitget. You got 15% off your fees. And if you are interested in trading signals and taking your trading to a whole new level, join us on the VIP group over here. All the information in the pinned comments, so you can find our entire trading track record over here since February 2021. You'll get access to two groups. You'll get access to the main VIP group where we post trade signals, entries, targets, stop losses, etc. Okay, and you'll get access to the group chat where we post a whole range of other trades, a whole range of information, educational posts. All of our members are in active daily, posting their ideas, posting their trades, so much relevant content. You also get access to the main general chat, trading chat, help chat, and extra videos. Let's go ahead, guys, and get into the video, starting off with, of course, the market data. March obviously closed very green, 22.96%, but failed to close a monthly candle above that 30,000. The monthly candle actually ended up closing around 28,500. We'll give it a benefit of doubt, around 28,500, specifically 28,760-ish, around 28,476, sorry, around that range. So not really that high into our resistance, still in the lower end of resistance, but not too close to that 30,000. But again, a very strong month by March, 22%. One of the strongest ones we've seen for quite some time. April is now opening a little bit red, and of course, after what we have seen, which was that monthly candle close below 30K, we could potentially see April being a red month. We could potentially see some red in the market this month, a bit of a drawdown. We'll talk about that possibility for that in today's video. Moving on, volume down 45%. Again, nothing unexpected. It is the weekend. We're going to see volume down. It's 45% down. Liquidations follow volume, so 42% down liquidations. Again, nothing unexpected. It's Saturday in America, Sunday in Australia. The weekend price action is always a little slower. Volatility index, 3.45 on the 30, and we're looking at the 60, 3.13. Now, you're probably wondering, MegaWhale, why is volatility important? Well, volatility and volume, they kind of go together. Volatility, volume. If volume increases, volatility increases. If volume drops, volatility drops. If volatility drops, volume drops. They go hand in hand. When there's more volume and thus more volatility, there's more price action and more likely to see larger moves on the charts and more sporadic price action, and we get these bigger swings, better for trading, better for everything, okay? So we are seeing volatility slowly rise on the higher time frame. It does suggest, especially after a downtrend, we are seeing a reversal, we are seeing an uptrend develop, and this uptrend is gaining strength. So we start to see the volatility pull back on the 60 and the 30. It can be a sign of weakness. So we are starting to see, if we zoom in really closely over here, I'll try that again. We can see that we are starting to slowly plateau in volatility over here. Right? If we look at the last like 15 or so days, we haven't really increased that much. I've been sticking around as 3.15 on the 60. If we go to a 30, you can see as well, on the 30-day period, we are very much plateauing since around the 15th of March. And if we go to the charts, the traditional charts over here, you can see ever since around the 15th of March, we have been showing signs of divergences, particularly bearish divergences, right? Volatility, volume, momentum, they're all interconnected. We can see momentum is dropping, okay? Price is rising, volatility is dropping, we're at resistance, volume is dropping. These are indications of a rejection in play, indications of a possible rejection / reversal from the macro resistance. We'll get into it, but that is why volatility is important. That is why we do discuss it in our videos. Let's go ahead and talk about liquidations really quickly. So overall liquidations within the last 24-hour period, if it does load over here. Oh, it's a bit blurry, but you can kind of see it over here. We've had a pretty big spread between shorts and longs liquidating. It's been very, very choppy. A lot of shorts, a lot of longs liquidating. Overall, 43 million, so not a whole lot in terms of volume. But if we're looking at the overall, 15-minute intervals, it's basically been jumping from red to green, shorts, long, short, long. A lot of chop going on in this range, and we expect the chop to continue until the markets open in the new week. And let's talk about that. The DXY, guys, the DXY has broken upwards from the descending channel. We've been watching the channel over the last few days, in the last few weeks really. You would know that we said rejection from 103 will result in a strong move toward the downside, most likely bouncing within our lower support zone, which would then result in a continuation and break upwards as we expected, as this is a descending channel. A descending channel is a downward consolidation, okay, but it is a bullish reversal structure, meaning at the end of this downward consolidation, when the downtrend does break, the price generally enters a reversal. How high will this reversal take us? Let's go ahead and do a measured move. We'll go ahead and take the distance between two, apply to the breakout, and you can't make this stuff up, guys. You really can't make this stuff up. It takes us to 104. This red line on the dot, perfect, is going to be the max measured move target. If we know anything about measured moves, they give us a max target. Realistically, we push up to the next major resistance. Next major resistance, 103. That is going to be the next major point of testing. If we do see the DXY move up this week to 103.5, the probabilities that Bitcoin is going to reject this week becomes much higher. If we do see 103.5 for DXY, we will see Bitcoin drop below 28,000 this week, and that could push Bitcoin into a lower price. We'll discuss that in today's video, of course. Looking at the Dow Jones, we have seen the Dow Jones bounce very, very well. Again, nothing too interesting. We are at resistance here as we are at that local high. We do need to start clearing these local highs to push higher. And S&P 500 did break through that neckline, which was absolutely fantastic to see. Again, anywhere between this range over here is going to be our next target. We're looking for rejections in here. Looking fantastic though for the short term. For the higher time frame, it still does have quite a ways to go. Really, that next target that we do need to break above before we turn macro bullish on the S&P is 4,300, okay? If we want to talk about macro uptrends, we want to talk about higher time frame swings, we want to talk about extended monthly long-term uptrends, we're looking for a break over our 4,003 for that. Until then, any sort of move upwards should be considered a possible rejection when we move to these higher time frame resistances. So this gray box, this red box, all of these should be considered rejections, should be looking for potential indications of pullback, not just immediately shorting, okay, but looking for indications that these resistance zones are now going to be turning into rejections. That is what we're doing with Bitcoin. Let's go ahead, guys, and get into a Bitcoin chart now. We'll start on the daily chart, we'll build it up to a smaller time frame, and then we'll go to the macro at the end, or maybe the other way around. We'll see how we go. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So, as we said already, guys, we're seeing the 30, we're seeing the 60-day volatility index signify we're having a bit of a plateau in volatility. And as I said before, guys, if we look at price action, particularly price movement, we can break it up into a few different subcategories of what causes price movement, right? Generally, we need liquidity, we need volume, we need volatility, and we need momentum. There's generally 4 things we need: liquidity, volume, volatility, momentum. Those are kind of the 4 concepts, sort of the 4 things we need to move price in the market. So when we start to see some of these, such as volatility, decrease, okay, such as momentum decrease, it signifies the probability of the current trend reversing starts to increase, okay? So the current trend, uptrend, whoever be a downtrend, well, it doesn't matter trend, the current trend you're in, whether it's built on the premise that these components of price action are moving in a direction that facilitates the growth of the asset price. So when we start to see components of what facilitates this price action reverse, it could be a leading indicator to that the price action will soon also reverse. And that is all it is. It's a leading indicator of what the price action could do, not will do. Technical analysis and indicators are not here to tell you what the price action will do. They tell you what the price action could do, and then you apply a structural analysis and you apply context based on the economic environment, okay, using your experience and knowledge to then formulate, okay, probabilities based on the charts, and you apply your targets based on your risk reward ratios, and that is how you trade. Okay, I just gave a crash course on like 5 seconds. I hope you enjoyed that. But those are the components of price action we're looking at right now. So we know volatility is plateauing. We know momentum is dropping. These are facts, okay? These are facts of the chart. We can confirm these facts. Like I said, volatility, 30-day index, 60-day index. Momentum, okay, we can see momentum is dropping, okay? Volume, we know volume is also dropping because when we see consolidation and compression, it indicates the volume is dropping, and also indicates our volatility is dropping and our liquidity is dropping. So we have all 4 of those components falling. We have all 4 of those components suggesting as leading indicators the price is possible, likely to reject from this range. So we have that premise. Now we need to talk about where could we go from there. And number 2, what happens if we actually ignore all that and break above 30,000, and why is 30,000 so important? So 2 things. Why is 30,000 important, and what happens if we break above, ignoring those indicators? And number 2, if we actually abide by those leading indicators and we do see a rejection, we do see a pullback, how low could Bitcoin go? Where could Bitcoin go? What are our targets of Bitcoin? And then we'll get into the macro. So let's get into it. 30,000, incredibly important resistance, guys. A yearly long resistance. As you can see, I've marked out the next 2 major resistances on the chart. Above 30,000, our next 2 major resistances on the chart are going to be those green boxes. This represents our 40,000 major horizontal psychological support resistance and 48,000 major bull market resistance. This is the resistance where if we break above, the bull market already started, but we'll see significant volume, significant volatility come into the market, and the price will explode. You'll go parabolic above that point. Okay, but I've said already, guys, the bull market really starts off above a few points, but we'll come to about 30,000. So 30,000 is incredibly significant on the chart, guys, as it represents that yearly low, this yearly low of the prior cycle. This is our 2021 to 2022 bull run, okay? We're in 2020, well, 2021 really, 2020, 2021 bull run, 2022 was a bear market. But 2021 bull run, our yearly low was of course a $28,000 to $30,000 range. If we take a look at $28,000 to $30,000 range on the VRPV, we can see on the VRPV, on the horizontal chart over here, once we break above that level, we have a slow, gradual incline in our volume range over here. It suggests that we do have a significant amount of resistance within this range, which kind of peaks out at 40,000. So even if we get above 30,000, the move towards 40,000 is going to be a slow, drawn out and difficult move for Bitcoin to push up to. If we get above 40,000, we can see the VRPV decreases to 48, and this will be an easier range to push through, and vice versa, above 48, a significantly easier range to push through. We can see the directions, the angles of these VRPV indicators. It suggests that as the price moves upwards here, we have increasing resistors to where it peaks. As the price moves upwards here, we have decreasing resistance until it peaks. Our peaks are our main resistance points, okay? Very straightforward stuff, incredibly useful tools. So 30,000 is going to be the major trigger for the next move upwards. So we can use our macro chart to confirm that. If we look at the prior cycles, every single time, guys, we break a monthly candle above the prior bull run yearly low, we end up moving upwards on a macro chart. We end up going upwards indefinitely until the next top. Indefinitely meaning we never close a monthly candle back below it. Now it could happen because again, it's only 2 instances and the 4-year cycle will not hold forever, but according to the data we have, if we go off that same pattern, okay, and again, the pattern will end eventually, we go off that same pattern, we should see the same result. That if we close a monthly candle above the yearly low of the prior bull run, okay, we will get that confirmation that the overall yearly chart is now an uptrend. We've got confirmation the weekly and the daily is an uptrend. We'll get confirmation that the monthly and the yearly is an uptrend when that occurs, okay? So 30,000 is an incredibly significant level. We'll come back and talk about that in just a moment. Let's go to the short term. So what happens, guys, if Bitcoin fails to break above 30,000? What happens if volume dropping, volatility dropping, liquidity and momentum dropping, these leading indicators are signs of rejection, and we do get a rejection? What happens to Bitcoin? Where can it go? So let's go ahead and bring up our VRPV. As we can see, we have a significant amount of consolidation occurring between the price ranges of around 27,000 to around 28,600. So we'll go ahead and draw a little square in there. This is kind of our consolidation range at the top of our move upwards. This is going to be the box. I'm going to call it the box, the determining box, okay? The predicting box of the future. If we break above this level on the daily, we will see a continuation to potentially retest these highs, okay? Even if we retest these highs, nothing has changed on the higher time frame. Everything remains. We have to understand this is a resistance zone. As long as we remain in there, whether we move upwards or we move downwards, or we ping pong between here for a million years, nothing changes on the macro chart. Nothing changes on the short term. The only thing that changes is this range of volume here becomes larger and larger and larger. But the triggers remain. The targets remain. The potential directions remain. The indicators will most likely remain, okay? We need to see a trigger move above or below to get a significant shift in the direction of the trend. Breaking below 27,000 is significant because we can see below 27,000, we have a significant reduction in our trading resistance, our resistance range. Therefore, if we lose 27,000, we should see a surge in volatility, a surge in momentum, a surge in velocity, and a surge in that price action. That will occur and that will begin below 27,000. That could facilitate a strong correction towards 25.2 to 24.6. So higher time frame targets. If we do reject from here, the higher time frame target will be 25.2 to 24.4. A rejection is going to be a loss of 27,000 on the higher time frame. We'll come to the shorter time frame in a second. A daily chart, loss of 27,000 will result in continuation down. If we come down and retest 24.4 to 25, and we lose that level, well then that's when we go back and look at some of these lows. 20,000 targets, okay? And these lows here, 21.5k targets. If we lose the support level, those are our lower targets. Of course, at 20,000 to 18,300 is a significant support. We're not going to talk about that too much today. Let's go to a smaller time frame, guys. Let's go to an hourly chart and dissect it even further. So you can see over here, if we delete this over here, our 27,000 has held up as a pretty substantial support over the last couple of days. We have seen quite a few wicks into our range, nothing really below it. Again, this is going to be the trigger for that move toward the downside. A loss of this level will trigger a continuation downwards. Moving toward the upside, we have that same level, 28,600-ish to 28,800-ish, this range over here. A break above this level is going to continue and push the price higher. If we look at the VRPV here, guys, we can see significant drop off above 28,800, 29,000. Therefore, we should see the exact same thing happen. Volatility, volume, liquidity, and momentum should increase if the price pushes above that level, and we should see a surge upwards to retest this upper zone of our resistance, potentially find a new short-term resistance, or maybe even break upwards. How could we know if a break over 30,000 is going to be a validated and confirmed break or a fake out. Look at momentum. Momentum tells all. If momentum goes up, we know volume, liquidity, and volatility rise. Okay? If momentum rises, volume, volatility, liquidity have to have risen. Okay, there's no questions. They have to have risen if momentum rises, okay? Because momentum is derived from those components of obviously plus also speed and velocity, but it is derived from those components. So if momentum rose, we know those components rose, as adding those together come to a formula which equals momentum. So it's like basic algebra, I guess. Moving back over here, guys, we need confirmation of momentum shift. The momentum is in a downtrend. The price action is an uptrend. Bearish divergence. If the price action continues upwards and the momentum continues downwards, we have continuous weakness. But if the price action goes up and we get a breakup on momentum, that is going to be confirmation that this resistance has broken and the price has cleared 30,000, okay? That is what we need to see for a continuation upwards. Let's get into the macro chart. How has anything changed? We talked about this chart already. Looking at this chart over here, the Bollinger Bands, guys, we're at resistance on the Bollinger Bands again. Not a very good sign. When we touch the resistance on the Bollinger Bands, we have two options. Option number one, we continue flirting around the Bollinger Bands and we continue upwards like we're here, but that doesn't happen unless we're in a bull market or an aggressive trend. We're not really in a bull market and we're not really in an aggressive trend until above 30,000. So the most likely scenario is we find some degree of rejection from here, like we saw here, like we saw here, like we saw here. Okay, many times we come back and retest the midline. The midline will take us to around 22,500-ish, but again, we know that midlines, measure moves, rejections don't take us there, they take us to major supports. 25.2 to 24.4 is the next target if a rejection occurs from there. That is our first indicator. The second indicator, the Gaussian channel. Now, this is one bullish thing I would like to bring up. The Gaussian channel weekly is about to close above the midline. We have 20 hours. The Gaussian channel weekly, for it to not close above the midline, the price needs to fall below 27,562 in the next 20 hours. So this is a bullish indicator. If we do close up here, this will be a very good sign for a macro and potentially result in a continuation upwards through the midline. We've seen on the weekly, every time we close a candle above the midline, we continue through the Gaussian channel towards upside. Again, we have seen it over here. Now you can go to a smaller time frame chart, such as a daily chart, and we can show you the same thing on a daily, guys. Every time we close a candle above the midline, we'll show you very many scenarios over here. Here's a couple of scenarios. Okay, just in this last little bit here. Midline, close above, we push through. Okay, midline, close above, we push through. Okay, midline, close above, we push through. Now the midline is also a massive rejection zone, so we do not push through midline, we could experience a strong rejection. We have seen that many times already. So on the higher time frame, guys, watch that midline, watch that weekly close. A failure to break above could be detrimental to the price action, but alternatively, a break above will be very good for the price action. Our moving averages, 200, we are above. Really good to see. It'd be absolutely catastrophic, guys, if we come back and lose the 200 again. The 200 is sitting around 25,200 again, supporting the fact that this massive support zone, 25,200, 24,400, is a strong support. Loss of that will be catastrophic. 300 moving average pushing upwards, obviously very nice to see. Nothing too significant there. If we go ahead and change the 300 to the 50 really quickly, we can see the 50 is over here. And one good indication I'd like to point out over here is we can see that the 50 very slightly is almost looking like it's starting to kind of get this curvature occurring. Now it needs to really flip this 200, okay, if we want to see some strong indication of a uptrend. And this could take some time, it could take months. Like I said, we do not expect the bull run to start, guys, until two things occur, which is number one, a break of 24, a break of this green line, which is going to be the date range, which is April, March 2024, a break over our local dotted high. Okay, we have seen every single time we break over these local highs, which is the first dead cat bounce in the bull runs, we see a bull market start. So you can see dotted high over here. Okay, we broke above it. That is when we entered a bull run. Dotted high over here, we broke above it, we entered a bull run. Dotted high over here, break above it, we enter a parabolic. It's like the parabolic phase of the bull run, okay? So we don't expect the bull run to start for quite some time. So again, this could take time to develop, and we don't really need to see a golden cross occur any minute now. It could take weeks, it could take months, it could take a long time to occur. But it is something to watch, because if the price action continues upwards, and we continue to see that 50 kind of like converge over and crossover, that would be a good indication the macro is shifted, okay? Another good indicator over here is going to be the market cipher A. What we are seeing over here on the market cipher A, if I go ahead and get rid of these smaller time frame averages, we can see our smaller time frame move averages are not only crossing over each other, okay? We can see they're crossing over each other, but they're actually moving upwards past the 50. Again, we need to see those smaller time frame moving averages cross over the 50 to signify a strong uptrend, okay? We are technically not in a strong uptrend on the weekly chart until that occurs. For that to occur, we need to see the price action move higher. To move higher, we have to break the 28 to 30K range. Do you see how there's so much confluence here at 30K? There's so much significance from a technical, from a moving average perspective, from a horizontal range zone, from a macro chart, there's so much confluence. Anyways, I'll leave the video there. If you enjoyed, leave a comment, leave a like, leave a subscribe. I hope you enjoyed the video. Sign up to Bitget, support me, support the channel. Sign up to our Crypto Academy course at gmail.com. You can contact us. 10-minute course will teach you how to trade, teach you everything you need to know. All the information is there. I highly recommend shooting us an email. It takes a few minutes. We'll send you all the information for that, what you'll get, what you'll learn, even a video explaining it. If you're not interested after that, that's fine. It doesn't hurt to find out what you could potentially learn, because it could make you thousands at the end of the day. Thanks for watching. See you tomorrow.